Good evening, everyone. It's a little around midnight on Monday, the 17th, and I'm filling in for Sam, who's out today. I'm a little delayed in making this video because I was thinking about what to present to you guys. It's been a while since I've done something on the public YouTube, and I decided to try to answer the question of when I think this correction is going to be over by sharing with you some analysis techniques that I use for Fibonacci-based time-based analysis. And the reason why I do that is I think it's less interesting to just kind of give you my opinion than to show you a methodology that I use, and then you can use it going forward to kind of derive your own views as to what might be going on. For those of you looking for a quick answer, let me tell you, I don't think the correction's over. If you remember, then you've heard me say this many times. I've been, of course, consistently active on the member Discord, but despite not having posted on the public YouTube. But just to share with everyone, that I think the correction is likely to end in 2019. If you had to put the gun to my head, I would say probably midsummer of 2019 would be the earliest point at which I feel comfortable calling a bottom, like a true bottom. And then I think it'll be a gradual buildup of demand, accumulation of demand before we start seeing significant and sustained motive price action. So that's my view. I can share with you some of the tools that I use to derive that view, and that's the purpose of this video. And I wanted to start by covering some very, very basics, which many of you, especially if you're a experienced trader, this will be completely old hat to you. But for the sake of covering our bases with all our viewers, I wanted to quickly run through using Fibonacci time, or sorry, Fibonacci price, and then share with you the way I've adapted that to do Fibonacci time analysis. So here we have a classic textbook impulse. It's the one structure in Elliott Wave Theory that subsumes all of them. At the end of the day, everything that can be analyzed ultimately rolls up into a 1, a 2, a 3, and a 4, and a 5, where the 4 doesn't overlap the 1. And on a textbook basis, the 2 should retrace about 50 to 618 of the 1. The 4 approximately 382 of the 3. As you can see, these fib poles here. And then there are wave ratios that are highly likely, where the 3 is about 1618 to 1, and the 5 is roughly equal to the 1. That will be a textbook impulse, okay? And it would channel quite well too, where you connect the 2 and the 4, pull it up to the end of the 3, and you should get pretty close to the upper boundary line for the 5. Okay, sometimes a little underthrow, sometimes a little overthrow. In my experience, as I've said in past videos, I think the median line is as significant. So if you don't see a move that looks like this, often you see something that looks like this. Okay. Nevertheless, this is your textbook impulse. Now, one of the things that in my opinion, the Elliott Wave Theory sorely lacks is enough focus on time-based analysis. They give you some very solid guidelines for price-based analysis and wave ratios in terms of how much price has traveled, but only very, very sparingly touch on the important issue of time. And I just want to remind folks that if you don't consider time, you're just half a trader. Trading is about looking at two-dimensional recording of human emotion, fear and greed, and trying to arbitrage inefficiencies there for your profit. And if all you're looking is the y-axis, which is price, and ignoring the x-axis, then you really have an incomplete view of what's going on. You guys that have followed some of my videos know that I'm a huge fan of geometry. It's my primary TA tool, even more so than Elliott Wave Theory. And part of the reason why I like it is it forces you to think about time, because obviously if you're considering geometry, you must consider both axes. And the channel here illustrates the point about that perfectly. So the Elliott wave channeling methodology suggests that you connect the 2 and the 4, pull it up to the 3 to get a rough projection for the 5 in a textbook impulse. And that's about all it says. But implicit in that, in my opinion, is some guidelines as to how to think about time. So let's keep the channel on here, and then let's do some alternate price projections, so you could see the ways in which we project 3s and 5s. So going from the 0, or the beginning of the 1, up to the 1, off the 2, gives you an estimate for the 3. Now, obviously, I've drawn this to fit pretty closely to the textbook to illustrate the textbook wave, 1618. Right? That's textbook. 3 is the most extended wave, most often extended wave, and it extends usually to about 1618 of the 1. I would say a good double-digit percentage of the time. And then there's a cluster of Fibonacci levels at which, about 80% of the time, you're going to see the extension land somewhere in between those, like 1272, 1618, 2618, 2236. These are all interesting fib levels for price projections. Okay. Similarly, you can measure the 5 by one of two ways. If it's not an extended 5, and it's the case where the 3 is extended, which is most often the case, well, typically when the 3 is extended, you don't also have another extension in the 1 or the 5. There are exceptions for higher degrees. Anything that you have to look at in log to really get a good picture of it, typically there's different guidelines and rules for those. Not rules, different guidelines for those, but on a standard impulse, the 5 should approximate the 1, give or take, if the 3 is the extended wave. So obviously one way to do that is to measure the 1, like this. And then instead of the 2 this time, we're going to project it off the 4. And you've got, roughly 100% here. Okay, so this is again, not drawn to the tick, but to illustrate this shape. So I've purposely drawn it this way. The other methodology, which let me keep that on. The other methodology which I prefer is, if 5 is not extended, then from the 0 to the 3 off the 4, 50 to 618 should be about where the 5 lands. And it's a kind of a slightly different way of saying this guideline of equality. So let me from the 0 to the 3 off the 4. You can see here that the 50 to 618 is pretty close to 100% of the 1. Now, the reason why I like this is it captures a lot of the cases where the 1's extended, and even the 5's extended, right? Whereas the guideline of equality captures one specific case where the 3's extended, and or that there's no extended wave and the 3's the longest, or not the shortest, I should say. So this 0 to 3 off the 4 captures many cases, because 50 to 618 is the rough guideline for where the 5 usually lands. But if it's an extended wave, then any of these Fibonacci levels are fair game. 786, 100%, 1272, 1618. So I just think it's a more versatile way to do it, but you can do it either way. And oftentimes you should do it both ways and try to see if you can find confluence. Like here, 1272 and 618 and 100%, 50% are clustered together, and so from a trading perspective, these would be interesting levels to look at. Okay, now this concept of clustering Fibonacci levels off of different pivot measurements off of different pivots is a really, really important one. It's not one that I use. Actually, let me refer to Carolyn Borodin, the Fibonacci queen, where her entire methodology is to pull fib levels, both vertical kind of price-based as well as time-based, to try to find clusters of confluence. And then when you find confluence in time clusters on the x-axis, and then they coincide with where you think price clusters project towards, then you have a very high confidence trade, right? So this is kind of where most analysts stop. This is the basics, and this is pretty good. It gets you quite far, okay? But implicit in this channel, and the fact that this is two-dimensional, and that the Elliott Wave Theory suggests you channel this way, is some time guidelines. Okay. Now these are not super precise, but what I've found is that a lot of the ways that you can measure Fibonacci price projections can be adapted for time projections. So let me illustrate. There's a equivalent tool to the APP, the alternate price projection tool, which TradingView clumsily calls the trend-based Fib extension. A terrible name. And then there's also trend-based Fib Time, which is, this is called an extension, Fib extension, and this is called just Fib Time. No consistency there, but they're the same tool, one's for the y-axis, one's for the x-axis. So let's do a measurement of the 1, sorry, a projection or extension of the 3 relative to the 1. So again, we're going x-axis now, so horizontal. So your first pivot will be the 0, second would be the 1, and then you project it off the 2. I've got this thing in blue, and you can see here I've recorded this so that the 3 lands right on 1618, right, which is the textbook measurement for price for the 3. But note how well this channels geometrically when the 1 is, or sorry, the 3 is 1618 to 1, right? Now here's another one. The 2 and the 1. Let me take this off because I've made that point already. The 2 and the 1, similar how there's to how there's a Fibonacci retracement level of 50 to 618 for the 2. I've found that if you do a ATP, alternate time projection from the, whoops, wrong tool, from the 0 to the 1, off of the 1, which is basically just a fib pull without a pivot to anchor off of it, then that the 2 generally lands at some interesting Fibonacci level. So I've got it here closer to the 382, between the 382 and the 618. If I drew a 50%, it would probably land right on the 50%. But unlike 50 to 618 being the guideline, I think any of these are fair game. 236, 382, 50%, which is not on here because it's not a fib number. 618, 786, more rarely beyond 618 because that will be a pretty long correction for a relatively short impulse. But nevertheless, sometimes you have corrections that last longer than the impulse. So, and if they do, you should pay attention to these different fib levels. Okay, that's another way to kind of look at fib time, is how much of the 1 is the 2 capturing in terms of time. Now, you can do the same thing as you do for an APP for the 3 with time. So you go from the 0 to the 1 off the 2, and the 3 again will be 1618. Actually, I've made that point already. What am I talking about? You can use the guideline of equality to go from the 1 off the 4 to approximate the 5. Now this, to me, the guideline of equality is really a price guideline, so I'm not saying that the Elliott Wave Theory suggests that the 5 should take the same amount of time as the 1, but if it doesn't, then I think looking at different fib levels, like maybe the 618 here, the 786 here, possibly longer if it's a kind of a sideways meandering 5 that lands closer to the median line than the upper boundary, then 1272, 1618. You kind of have to use your judgment here, right? If it's a very sharp, steep slope, then you're expecting a smaller fib number, like maybe a 382. If it's pretty close to the upper boundary, I would say 618, 786, 100%. These are all fair game. If it's an overthrow or kind of an extended, meandering, more lower sloped 5, then something longer than that, 1272, even 1618. Sometimes something with a 2 handle on it makes some sense, right? So my point is, you could even do it for the 3 and the 4. I neglected to do that one, but same thing as the 1 and the 2. 0 to 3, off to 3, and then the 4, I've got it at about 618, right? Note that as I do this 382, 618, 1618 in terms of time and approximately 382 here, give or take. Look at how well this channels, right? So the purpose of geometry is that if you don't want to do all this Fib time-based analysis, well, it forces that dimension of analysis into your charting through the geometrical structure, the shape, right? But there are cases where you can't really channel that well. For example, let me hark back to the first video I ever made on YouTube for Trade Devils. I showed a chart pretty similar to this one. Okay, this is the entirety of the Bitcoin price record as captured by the BLX, which is an index that rolls up all the historical prices. I think they average them together, maybe in market cap weight them. But for the purposes of this analysis, it doesn't really matter too much. The point is, the first exchange of Bitcoin that had any kind of commercial value on a public exchange happened in the week of July 12, 2010. I've got here the first commercial transaction of any kind when pizza was bought with Bitcoin, May 22nd, 2010 here. To me, that's where the zero starts. Some diehards would say, well, no, shouldn't it start where the Genesis block started in 2009? And to me, this is kind of historical artifact more than anything related to a price record. A price record in a financial market is about a transaction. And so the first transaction is really where I think the zero should start. So if I were to anchor time-based analysis, I would do it off the zero. Okay. Now, this is one of those charts where you can have every guideline and rule in the world for Elliott Wave Theory, and you still have no idea how to count this. Let me just take all this marking off, all the markings off, right? You guys have seen this chart before many times. You've seen it in my videos. And there's a raging debate even amongst extremely experienced, certified, and pedigreed Elliottians as to how to count this thing. It's very subjective, right? To be honest, if I showed my 4-year-old kid, he'd probably say, okay, this looks like a big, interesting piece of the chart. This looks similar and interesting, and this is obviously similar and interesting. And so, if they're all about the same significance, then this would be 1, 2, 3, 4, 5, right? And that is a pretty likely count given the shape of this. But there's also people that would count it as a 1, 2, 3, 4, 5. This is the 1, this is a 2, and this is a 3, and this is a 4 in progress. There's also some people who might say, well, this is 1, 2. That's the first cycle. 1, 2. The 1 you can't see because the pizza was around here. 1, 2, 3, 4, 5. That's the 1, the first cycle. This is a 2 corresponding to the first cycle. And then this is 1, 2 corresponding to the third cycle. So it's a massive 1, 2, 1, 2, right? All of those are credible counts. I think some more likely than others based on probabilities, but none of these break rules. They're all reasonable counts given that this in arithmetic looks like this, right? So there's a lot of different ways to count this. It's pretty subjective. In order to try to add some objectivity to the subjective, that's why we do things like Fibonacci analysis, right? But when you have something that requires log scale to be able to analyze properly, well, it really, really skews price. Let me add the markings back. This is 0 here. I've pulled these fibs from 0 just to be agnostic as to which wave count is being measured. Frankly, it doesn't really matter whether you pull this fib from here, this $2.17 level, or 0, when the peak happened at $1,200, right? So it's basically the same pull. So whether there's 1, 2, 3, 4, and you want to measure the 4 retracement off the beginning of this 3 here, whether you pull it from here or here, it doesn't matter. I mean, it's really 1% difference or something. Similarly for here, this is a nearly $20,000 move from here to here. So pulling it from $130 as opposed to 0, same effect. Okay, these are basically the same fib pull. So that's kind of why I did it this way. And also it works for multiple counts, not just 1, 2, 3, 4, and 5. And this video is not about the counts, it's about time. So let's start doing some of the analysis that I shared with you that I do on this chart. Because all of these retracements are balls deep, they're all greater than 786, this one greater than 886 even, and because we're talking at the cycle probably, or super cycle, or at the lowest, the primary degree, definitely some of these heuristics for how to measure price Fibonacci from wave to wave and retracement, etc., it falls flat on its face. This is clearly never going to be 1618, the one at the cycle degree. Not never, but rarely for an emerging asset that's very young like Bitcoin, almost never. And then you've got highly extended fives that are pretty typical in cycles. The Elliott Wave guideline even supports a difference for guidelines for the cycle degrees, or degrees at a high time frame. So how do you analyze this? If Fibonacci retracements don't really give you insights, and Fibonacci price projections don't really come close to what you're used to seeing, then what do you do? Well, like I said, there's a y-axis that's highly distorted and maybe even deceiving from a measurement standpoint, or at best confusing. And then there's the x-axis, which is not log. Even in a log chart, the x-axis stays arithmetic, right? So let's look at Fib Time, see what that says. Let's go through multiple cases. The case where this is a 1, 2, 3, 4, and a 5. The case where there's 1, 2, this, the 3, and then the 4. And then the case where it's 1, 2, 1, 2. To me, those are the three most probable cases. I don't have time to detail why that is, but if you're an Elliottician or an aspiring one and you've studied some of the rules and guidelines, as far as the right look, the length of these corrections relative to each other, the length of these waves relative to each other, etc., those three are the counts that make the most sense to me. Now, can we use Fib Time to estimate when this is going to end? Whether you call this a 2 correcting this entire first cycle, or whether it's a 1, 2, 1, 2, and it's a 2 correcting this one of the three, or whether it's of the same degree as this, and this is 1, 2, 3, 4, and this is a 4, and this is a 2. Those are the cases we're considering, right? And what I'm telling you is that 2 out of those 3 cases have this thing going on for a lot longer than this correction. If this is a 4 and this is a 2, well, most typically the 4 is some kind of greater than 1 major fib extension of the 2. We already saw that in my little manufactured example to start the video. And it could be, it could be 2618, it could be 1618, it could be 1272, it could be any of those major levels, 1414, etc., etc., etc. If this is a higher degree, then it's even more true that this is going to take substantially longer than this. If this is all cycle 1 and this is a 2, well, then this isn't even the right measurement. It would be, what is it from here to here? How much of that is this going to cover? Is it 236, 382, etc.? And it would take us way past the mid 2019. So if this is 1, 2, 1, 2, then there's some hope that this could be short. Okay, that's the case I want to cover too. So let's do those in order. Let's do the most obvious, visually obvious one of 1, 2, 3, 4, 5, right? Is that a credible count based on Fib time projections or measurements? ATP tool. Remember, this is a 0 that I marked. But if you kind of want to use this and fake the funk, because clearly this can't be a 0 since this went below. So what is it, negative? Obviously not. So, but if you want to fake the funk and start here, it doesn't really change the analysis too much. Okay. But go in here, 0 to the 1. Let's measure just this retracement first. Okay. Does this qualify as a decent 2 from a time retracement perspective? Obviously you can't see that, so let me make it so you can see it. Well, from the 0 to the 1, the 2 ends almost on the nose 382, right? A very credible level. of time spent correcting this impulse. Very credible. Okay, so it passes that test. Now, what if? Sorry, I think I picked the wrong pivot, or it's the wrong thing to pull. Okay, so 0 to 1 off the 2. The bottom of the 2 would be right here. And if this is a 3, what is it? Well, it's right between the 1618 and the 2236. If I put a 200% marker in there, it would probably be damn close. Let me just temporarily just put this in as a, yeah, very, very close to double the length in time, right? Very credible for a 3, I would say. Very credible. So it passes that test. 1, 2, 3, 4 certainly passes that test. Now what about this 4? If that's a 1, 2, a 3, and a 4, then this should be related to this 2, potentially based on a Fibonacci level, right? Should be longer. So let's see. Longer in time, I mean. So beginning of the 2, of the proposed 2, end of the proposed 2, off of the peak of this proposed 3. Actually, I picked the wrong pivot. This is the peak right here. The Mt. Gox debacle started around here, and look at that. Almost exactly 2618. That's pretty interesting. I also want to just highlight that, again, it's not to the tick, but look at where some of these Fibonacci levels land. 146, it's a major ratio. 236, 382, beginning of this drop. 618, pretty close to this low pivot here. 786, right on it, on this low one, on this near-term low. Then it retraces to about, until it reaches about 1272. And then the 1618 picks this drop up. 2236 is close to this pivot here. And then 2618 is very, very close to the end of the correction, right? So, again, these are not to the tick, but as I've said before in my videos, when you do Fib time projections and analysis, just bake in a 10 to 15% fudge factor. It's not as precise as price. So, you know, there is a reasonable amount of technical confluence between these levels. These are all major Fib levels, right? So it should give you some comfort that we're looking at things, you know, through a reasonably legitimate mathematical eye. If we're measuring this 2 to this 4, and this is 2618, it does pass that test. Now, it doesn't force it to be a 4. There could be other counts that have this integrity from a Fibonacci perspective untouched and still are valid counts. Like this whole thing could be a 1 and a 2, and you're comparing a 4 of the 5-wave move to the 2 that corrects all of it, and so maybe that, you know, 2618 is a reasonable extension of that. We don't know, right? But all I'm saying is the count that's 1, 2, 3, 4 so far is flying, passing the Fibonacci test with flying colors. Now let's look at this tricky move up here that was such a big multiple of the 0 to 3 that it's almost comical if you try to do a APP off of it. But not so comical with Fib time. Again, this is not log scale Fib time. 0, let's do it both ways. 0 to 3 off the 4, or the proposed 4, gives us what? Very close to 786. Again, a very reasonable level. We covered it in that diagram, this diagram here, remember? Very reasonable level for the 5 to take as a projection as a 0 to 3. Now let's do the other way. Let's do guideline of equality. Obviously, this is a highly extended 5, so we shouldn't expect 100% of this, but we should expect some Fibonacci level to be pretty close. So 0 to 1, Not off the 2 this time here, but off the 4, which would be here. And you get damn close to 2618, right? Not bad at all. I mean, yeah, there's about a 10% fudge factor in there, but and obviously in price, the difference between 6,000 and 20,000 is mountainous, but we're looking at the x-axis here. It's damn close. It's not that far off, I would say, especially when you're covering a multi-year period like this, 7 or 8 year period. So pretty credible as a 1, 2, 3, 4, and a 5. What that means for this is pretty sobering, and we'll cover that last. But let's move on to the second count, where we've got all of this as the 1, a 2, a 3, and a 4. Probably my least favorite of the 3 probable counts because of this. If all of this is the 1 and this is a 2, this looks like a really short 3 in time. Now, obviously in price, it more than passes the test, but let's look at it. The 1 off the 2. And it's the same thing as the 0 to 3 to measure the 5 off the 4, right? Same pivots. We're just calling the pivots something different. We're calling it 1, 2 as opposed to 3 and 4. And as we saw before, about 7, 8, 6. Not even 100%. This is 100% right here, right? And for the 3 that's extended, especially for an asset like crypto that started getting adoption around here and mainstream coverage, and this was this historic epic bull run. I mean, you know, really, not even 100% of the 1 where nobody even knew about Bitcoin, doesn't fly with me. Okay. Of course, there is the theory that I subscribe to actually that says that whatever doesn't get happen in time gets made up for in price, and vice versa. So maybe it's the case that this is, you know, 0 to this 1 took a lot longer because nobody gave a crap about it, and then the correction brought some attention, and then it started to moon, and people got excited, and this was so parabolic that it more than made up for the lack of time relative to this 1. But I don't really buy that because, first of all, this was a major move too. You know, from 0 to, if this is a 1, it was a, you know, anything goes from a penny, which is here, this pivot here is a penny, to $1,200 is an astronomical return. So that in and of itself counted as a pretty sharp move. And on a percentage basis, I don't know that it's not sharper than this one, right? So I don't know that real explanation really makes sense to me. Okay, this seems a little short for a 3, so I don't love that. But even if we were to accept that it's a short 3 in time, well, this 4 as a percentage of this 2 should have some Fibonacci relationship, and more than likely than not be longer, right? So let's see, this correction here, from here beginning to end, off this peak here, we're not even at 100% of that, fellas. We're 100% of that is going to happen in towards the end of January 2019. Would be at exactly 100%, give or take a few days. And much more likely, these levels are going to come into play, the 1272 and the 1618, which again would take us to May 2019 through September, October 2019, somewhere around there. So beginning of Q3, end of Q2, beginning of Q3, and then mid Q4 would be, if it's 1272 to 1618 of this proposed 2, and this is a 4, that's kind of what we should look at. And let's see what that level is in terms of the extension, or sorry, if we were to look at from the beginning of this potential 3 to the end of it, off of the end itself, as if we were to do a retracement, then what would that be? Let's see. Let me change the color of this. Actually, let me pull it first and then change the color. So from here to here, this is as if we're doing a retracement off of the correction to see what percentage of the projected length it would be and this is a little too bright. How about just white? So where's 1272 is right here. This line right here, 1618 is. Oh, wait a minute. Did it land on it? Yeah, it did. Look, look. This is 1618 right here. Okay, right here, where I've got the little cursor. Now I'm going to undo my deletion, and you can see the 618 lands literally right on it. Literally right on it. That is called confluence. That is called confluence, fellas. So if this is a 1 and a 2, and this is a 3, then a level that becomes really interesting to me in time would be this 618 here, which is September, October 2019, and it literally lands right on this 1618, which is the projection of this 4 based on the length of this 2, if that's what the count is, right? You guys follow me there? If not, just rewind it. But I know it's confusing because there's so many different fibs here, but we expect 4s to be longer than 2s, often by 1618. I would say if this is a 4, 1618 is here, and we expect retracements to land on a major fib level like 382, 618, and the retracement in time, I guess it shouldn't be called a retracement, but the length as a percentage of this impulse for this correction was 618, right on the 1618 extension of this 2. Okay? Damn interesting level. Now, I haven't covered the case where this is the end of the first cycle and we're in a 2, because in that case, fellas, it's going to take a long time, right? So I'm going with kind of best case first, which is this 1618, 618, you know, probably Q2 to Q3 of next year. I would say, and I say this to the members, that I think 1272 to 1618 is a pretty interesting little hot box for to set your alarm clock for, to pay particular attention. You know, if I were a long-term investor, not interested in trading, and I wanted to capture Bitcoin at a low price and just hold for multiple years, I would kind of wait to see if it gets to a reasonably low level around this time frame and start accumulating at the 1272 to 1, and maybe build a 50% position at the 1618, and then, you know, wait for it to start going up, and then buy the dips, and you know, hopefully after a few months of that, then you've caught the beginning of the impulse, right? That's kind of the way I would play it if I were a long-term investor that had a long-term horizon. If I'm a trader, I'm keeping this in mind and looking at what structure this can be that allows this very sharp move to meander sideways long enough without literally going to zero, where it ends here in one final dump of capitulation before it starts to go on an impulse again. Okay, and we don't have time for that in this video, but perhaps, you know, I've shared some of the thoughts with my members. Perhaps in a week or two, or whenever Sam and I decide I should post another of these videos, we can cover what Elliott Wave counts get you to that point. Okay, but this is really a video on time, and so far the best case has us ending around here if we're playing probabilities. Now there is one case where this is 1, 2, 1, 2. It can end a little sooner. If this is 1, 2, and then all of this is 1, 2, well, let me take this out. I'm going to keep the hot box there just to remind ourselves that this is the 1272 to 1618 extension of this correction of 2014 from the peak, from the all-time high, gets us to this hot box in time. And so if we consider the case of 1, 2, 1, 2, where this is 1 and this is 2 of the 3, with the first cycle ended here, with it corrected here. Well, in that scenario, let's see where the major fib levels are. So this is the beginning of that impulse, end of that impulse. I'm going to click this twice because I want to anchor it on itself once, and then instead of moving it to the right to pick a pivot to anchor it off of it just on itself, So look at that. The 382 is waiting. It's projected to happen around January 28th, 21st to the 28th of 2019. So not that far away from now, about a month and change. And if this is a 1 and this is a 2, there's some case for it bottoming at around the 382, give or take a few days or maybe a couple of weeks, before it gets to this hot box of interest. So I want to be considerate of that possibility. That, let me put this back in arithmetic to illustrate, that all of this is a 1 and a big 2, and then all of this is the 1 and a big 2 of the 3. But here's some argument against that case. If we're looking to play the probabilities and looking at likely ranges here from a Fib time perspective, and all of this is a 1 and a 2, and this is a 1, 2, well, this as a 2 feels light to me in time. So let's just looks that way. I don't know that to be true, so let's measure it. 0 to the 1. And sure enough, it's not even 382. It's between 236 and 382. Doesn't mean it can't happen that way, but feels a little light. And the analysis doesn't change too much if we fake the funk and move this to the beginning of the total price record. It's still not really that close to the 382. Weeks away, right? Closer to 382 than 236 to be sure as we move this here if we fake the funk, but nevertheless not really landing squarely on the 382 or that close to it. And if we did the same analysis for this very sharp 2, actually it would be a 1, 2, a 3, and a 4. Let's see. Remember, in the case where this is a 1, this would be 1, 2, 3, 4, 5, right? So I don't know if there's another way to count it, given the wave shapes here. So cleanly defined here, 1, 2, 3, 4, 5. This is clearly an impulse. The size and time of these corrections seem to suggest that they're of the same degree. We already measured this one as 2618 of this one. So a lot of confluence here that leads me to believe these are actionary waves within the same impulse. These are reactionary waves within the same impulse, if we're going to consider the case. Sorry, these are not reactionary waves of the same impulse. That this is a higher degree than this one, given that it's 2618. It also could qualify as a extended 4 in time, but the case that this is a 2 is certainly covered by a 2618 extension of what is likely to be a 4 of a lower degree. So let's go from here, 1, 2, and this is 3, 4, from here to here, and see what percentage this is of that move, because this looks damn sharp. It is the sharpest of them all, and this is quite close to that in sharpness in terms of the drop past 786. So from here to here, and let's just zoom in a little bit. And it lands exactly on 618. See that? Right there, 618. This is 618. So even something as early in its cycle as this, with a correction this sharp that was almost a 100% correction of it, it did take about 618. And so the idea that this is light as a 2, or sorry, this is light as a 2, all of this the 1 and then 2 that corrects that first cycle, it's got some legitimacy. Okay, it offsets the likelihood that this is a 1, 2 of a lower degree, and the 382 is looming here, and this could be an interesting level. Yes, that's true, but then it's a little bit imperfect because of how small this 2 is in time. So again, there's no clear winner as to when, as to which count to consider, whether this is, going to get closer to the 382 here, or whether it's in this hot box for the other two case, for the case in which this is a 4. And then I haven't even done the case where this is a 2, because that's for another day. It's more to the right, let's say, by a bunch. And so those are kind of 3 levels to look at here. I don't think we're done. I said earlier in the video, I don't think we're close to done. I don't think, we're not going to be done in 2018. Almost guarantee you that. 2019, this 382 level is pretty damn interesting to look at. So, let's check in towards the end of January, see where we are. But the point of this was not to call that, or to call this hot box as the bottom. It's more just to give you some insights as to how to think about time as you consider whatever methodology you're trading with. Okay, so that's a wrap for today. I hope you guys picked up a thing or two. And for the members, I'm going to now post the freestyled alts that I promised you. And it is now almost 1 o'clock. So if I don't get to it, then I'll do it in the morning. I apologize. I was out traveling, so unexpected travel this morning.